Welcome back to my morning report on Friday the 3rd of July with me, Rich Perry, market analyst at Hantech Markets. Moving on to cable now, and we've had this correction in cable. We broke down below 56.65, and that sort of induced a bit of a correction. And the target of that correction is 55.35, and we've had 55.60, so not too far off the target of that implied correction. And what we've still got is these corrective momentum indicators. We've still got the RSI sort of, well, I mean, settling, I suppose you could argue, around that 50 mark, but the stochastics certainly are leading that correction on this chart. And there was a slightly negative candle yesterday. I mean, to be honest, it sort of rebounded into the close and sort of held a bit of that rebound today. And that sort of rebound came on the back of the payrolls report, and the jump or the solid move that we've seen in the last hour, or last few minutes actually, has come with the announcement of services PMI for the UK jumping to nicely above expectations to 58.5, and certainly that has helped boost sentiment for sterling. Whether it's a chance to sell or not remains to be seen, because it's interesting, this chart has now retraced bang on 50% of that rally. That 50% of that big rally that came in, and we hit 50% retracement, Fibonacci retracement yesterday, and started to rally. So we're now rallying up towards that 56.46, 38.2% fib level. It is just unwinding these corrective technicals though. You've still got the hourly RSI, interestingly, which over the past couple of weeks, really, every time it's got towards the mid-60s, low to mid-60s, fallen away back towards towards sort of below 30, which is indicative of a selling correction. And look at the MACD lines, just unwinding back towards neutral. The stochastics are already starting to fall away, interestingly enough, but I don't know whether that is sustainable. But it's interesting because this rally that we've got on cable today could well be a chance to sell. We've got this resistance that comes into play at 56.65. That's the old support of that sort of range that we were in for a few days, that broke down, that gave us that downside target. Now, I'm sort of in a bit of two minds here, because in bull market corrections you tend to find the downside targets are not quite met, and what we have got is a downside target at 55.35. We've got a low at 55.60, so only 25 ticks away from that downside target and where that support has come in. But not saying that the bulls have sort of recovered to any real extent yet, because you're still trading below that 56.65 key overhead resistance now, and all these momentum indicators just still look as though they're unwinding that oversold move. So you could argue it's still all playing out part of this corrective move in cable, but I am mindful that this is just a bull correction, and cable could well be forming support around that 55.60 level. So sort of a little bit of two minds really, but just I thought I'd make you aware of that fact that bull market corrections do tend to undershoot their downside targets. So that is something you need to remember when trading cable today. But it is Independence Day, so no trading out of the States, so that might might also make an impact, but certainly at the moment the impact of this services PMI data for the UK has been reasonably positive, about 5-10 ticks to the upside in reaction so far, and nothing too major yet though, so it still looks like it's a bit of a near-term sort of bounce within this corrective move that we've still got underway on cable. So I wish you good luck in your trading, and I'll speak to you later.